There's no question that Bitcoin is superior to gold in every respect. And I believe Bitcoin is digital gold, and we live in a digital world. I think Bitcoin will replace gold fully. The tradable gold is more like, 4 to 5 trillion. But I think as money shifts out of other assets, I mean, both Bitcoin and gold can win, and I think both of them are going to go up in price, just Bitcoin a lot faster. I could easily see us in the cycle go to 300 or 400 and then correct back to 250 or something. I mean, I think the volatility will be there for a while. That's not going to go away. It's going to be less. I mean, I think the biggest drawdown was like 90% in the beginning. We're never going to see one of those again. You're not going to get to buy Bitcoin 90% lower than it is today. You might get to buy it 50% lower than it is at the peak that we're heading towards. That seems possible.
Bitcoin is on track to hit $300,000 to $400,000 this cycle, gradually replacing gold as the ultimate store of value. That's the latest insight from Larry Lepard, founder and managing partner of Equity Management Associate. As Bitcoin cements its status as the digital gold of our time, it's gaining momentum over traditional assets like gold. While gold has been a reliable store of wealth for centuries, Bitcoin's limited supply and ease of use are making it the preferred choice for investors. With institutional investors continuing to pour in, both gold and Bitcoin are expected to appreciate, but Bitcoin's rise is happening at an unprecedented pace. According to Larry, Bitcoin could soon reach $300,000 to $400,000, proving its long-term staying power. As volatility stabilizes, Bitcoin is shaping up to be an increasingly solid investment for the future. Stay tuned as Larry Lepard shares more game-changing Bitcoin predictions in this video.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
History shows that when monetary systems break, the way you get the economy or the society back on track is you return to sound money. And so, the problem is, I mean, our money is very unsound and getting more unsound as we go, day by day. I mean, we were in a really unsound money system. It's getting worse. It's pretty simple. I mean, when something's broken, that's what you got to fix. You've got to have sound money. Pre-Bitcoin, that choice to do that would have been to go back to a gold standard. And who knows, there might be a time when the authorities try that because it's more tried and true. And, some people are afraid of Bitcoin, although I'm encouraged by what I see Trump and, a lot of Americans thinking that maybe we can just skip the whole gold step and go straight to Bitcoin. But, the two forms of sound money that exist in the world are gold and Bitcoin. I call gold analog sound money. Bitcoin is digital sound money. And, we need to go back to that. And once we get back to a sound money standard, things will be pretty good. In fact, very quickly, I think. But, the transition from here to there is going to be bumpy, and it's not at all clear how it's going to unfold. And I talk about that in the book. I have a lot of scenarios. I have a policy response section. I have, I kind of map out the various places that we could go here because none of us really know with certainty what's going to happen. But I'm pretty sure, pretty high probability that given how broken the old thing is, human beings generally speaking trend in the right direction towards improvement. So I think we'll ultimately fix this thing and be back on a sound money standard. But it takes time. It's not just tomorrow,
Where do you think banks are going to be in all these new reorganized?
Very interesting question. Yeah, I mean, I think, first of all, I think they'll probably end up embracing Bitcoin or they'll get left behind. Second of all, fractional reserve lending, I talk about that a lot in the book and how that creates money and how that's what really the core source of the problem, that these guys get way out over their skis and then they go bankrupt and then they get bailed out and then we print money to bail them out, and that's what fuels the inflation. I mean, it's a vicious cycle. I think the banks will be restrained. I think that if we really do return to a sound money standard, banks won't be able to lever themselves up. And in fact, in the book, I call for, abolishing the Federal Reserve and abolishing FDIC and basically having no backstop on the banks, so that a bank would have to behave in a responsible manner. And if they didn't, they'd go bankrupt. And if they went bankrupt, all the depositors in that bank would lose. And so there'd be a real incentive, for them to behave well, as opposed to the incentives that we now have, which create a lot of what we call moral hazard, where they just say, hey, who cares? I can be, like they did in 2008, I can be extremely aggressive, make as much money as possible. When the whole thing blows up, they'll just bail me out. I mean, that therein lies the problem, right? That bailout costs everyone else money because they print that money to bail them out. They get saved, and we all pay more for gasoline and food. It's just that simple. There's no question that Bitcoin is superior to gold in every respect, and I believe Bitcoin is digital gold, and we live in a digital world. I think Bitcoin will replace gold fully. However, not tomorrow. 8 billion people know that gold is sound money. A few hundred million, maybe at a large number, I'd say probably even less than that, really understand that Bitcoin is sound money. And so, it's done a pretty nice job. It's $2 trillion of market cap. Gold is closer to 18, as you say, although not all of the gold's tradable. I mean, you kind of consider the central bank gold, the antiquities gold, the gold that's on women's necks in the form of jewelry. Of course, that could be tradable. You could melt down your gold necklace, but the tradable gold is more like 4 to 5 trillion. But I think as money shifts out of other assets, I mean, both Bitcoin and gold can win, and I think both of them are going to go up in price. Just Bitcoin a lot faster, and because Bitcoin's got they both benefit from monetary debasement, but Bitcoin's got an adoption curve going on too. And so, Jesse Meyer on Twitter has a great chart that shows $900 trillion of financial assets, with real estate being half of that, and the balance being stocks and bonds and gold and cash. And, we're at 2 trillion. So it's 0.2% of 1% is currently Bitcoin. So we got a long way to go. I mean, Bitcoin could do a 10-bagger from here, which would imply that we'd be at $1 million a coin, and we'd still only be 2% of total global assets. So this is the soundest form of money ever invented. So I think Bitcoin is going to do a 10-bagger, and I think it's going to do a 10-bagger again. But, on what time frame, I don't really know. I mean, I use this kind of a lower end base case, the power law model, because it's got a lot of correlation looking backwards. And I think that shows you at 1 million in 5-6 years. But I think you probably get there faster than that. We're at that stage now, kind of the tipping point. I mean, the ETFs were a huge thing, right? And now we've got a president and administration that's crypto friendly and Bitcoin friendly. Things I heard when I was at MENA, you were there too, are that the strategic reserve is something they're going to do. We now know. I also heard at MENA that other nation states, including the UAE, Oman, and the Saudis, are all stacking Bitcoin. It's a coming thing, and it might surprise us. We just don't know. We just really don't know. But in my mind, it's going to be digital gold and then some. And I think both gold and Bitcoin are going to go up a lot in nominal, fiat money terms, because we printed a lot of fiat money, and they're going to have to print more.
The current financial system is failing due to unsound money and reckless banking practices, according to Larry Lepard. History has shown that the only way to restore a stable monetary system is by returning to sound money, which today means either gold or Bitcoin. However, Bitcoin is emerging as the preferred alternative, potentially making a gold-backed system unnecessary. Larry remains optimistic that a shift towards sound money is inevitable, though he acknowledges the transition will be challenging. He warns that banks must adapt to Bitcoin or risk being left behind. He also criticizes fractional reserve banking, where banks take excessive risks knowing they'll be bailed out. His solution? Eliminating the Federal Reserve and FDIC, which would force banks to operate responsibly, ending the cycle of reckless lending, bailouts, and inflation that ultimately harms everyday people. Now, let's dive back into the video to hear more from Larry Lepard.
This is a crypto-friendly administration, though, and that's a huge positive. I mean, Operation Choke Point, will get shut down. Banks will be able to do it. SAB 121, will not get through, and so the banks will now be able to custody and deal in Bitcoin. I mean, this is a big deal. You'll be able to borrow against your Bitcoin. I mean, there are a lot of good things coming that I think are going to be enormously positive. I mean, as I said, nation states. I mean, El Salvador continues to stack, and I think there are a lot of nation states behind the scenes that are stacking, Bitcoin. So, I mean, to me, I remember Saylor saying recently, we're kind of in that golden age, gold rush of Bitcoin, the 10 years where it just does the most, the fastest. And that's kind of how it feels to me. Like we're right at that cusp of really, putting up some numbers that people are like, oh my God, look at this. I mean, we're not going to stop at 100. We're going to go to 200 and then 300. And, and people are going to be like, whoa, and some will continue to say it's a bubble, but it's not. It's the real deal. Having said that, there'll be volatility. I mean, you mentioned, because of the way the cycles work, because of the halving, because just people tend to get out too far over their skis, and then of course FUD sets in and some people sell. I could easily see us in the cycle go to 300 or 400 and then correct back to 250 or something. I mean, it's that I think the volatility will be there for a while. That's not going to go away. It's going to be less. I mean, I think the biggest drawdown was like 90% in the beginning. We're never going to see one of those again. You're not going to get to buy Bitcoin 90% lower than it is today. You might get to buy it 50% lower than it is at the peak that we're heading towards. That seems possible. The gold ETF did very well, by the way, when it was launched in the early 2000s. It did extremely well, grew very rapidly, and it helped fuel the gold price from $250 to $1,900 an ounce. It was a big deal. But this is done, it's blown it away. Much more quickly.
There is a positive signal from the administration, right? Which means if you are someone on the fence of maybe thinking of investing, well, now you have no blockers and it's been legitimized.
Exactly. I can't tell you how many friends I had who said, well, yeah, that's all nice. I get your theory, but the government's going to shut that down. Well, honestly, I was kind of scared that we wouldn't get an ETF. I thought, they're going to figure out ways to stop that, but they didn't. And the ETFs are huge. They're really, really big.
Do you think, are we going to see an in-kind soon coming in?
Yeah, that's a great question. There are a lot of things you'd love to have in an in-kind ETF. You'd love to have, no capital gains tax on Bitcoin. Trump kind of floated that in one of his conversations. I don't know. I think those might be dreams that are a little bit too far. I think they're very doable further out as Bitcoin becomes more part of the infrastructure and ecosystem. Everyone will kind of want that, and so the government will have to bend to it. But I just don't know. Even the strategic reserve. I think what they're going to do, Bitcoin strategic reserve. I think they're going to do it as an executive order. If you consider that, basically Nixon and Roosevelt, they didn't go through Congress to do what they did monetarily. Roosevelt grabbed gold and then revalued. Nixon broke the chain to gold at 71 and devalued, and they just did it on their own. So I think that Trump will probably do an EO where he says, we're buying Bitcoin. Now, the question is how much and from what source, and the exchange stabilization fund's not huge, and it's used for other things, but they could use it to do this. I love the Loomis bill that says they're going to buy 1 million coins over a period of time. I've heard mixed debates on that. I've heard some people say, oh yeah, it's no problem. She's got the votes, they'll get it through. And I've heard others say there's no way. So I don't know. That'd be really great, but I'm not counting on that. But you don't really need any of that. Because we're going in the right direction. And I think the surprises, my sense is the surprises will be positive surprises because we are going in the right direction. And I compare it to gold this year. I just did my quarterly year-end report, and Bitcoin was up 121% last year. Gold had a good year. Gold was up like 27, 28%. It's a very good year, but Bitcoin was up 121%. It's just, and I don't see what's going to stop it. I just don't. I see more adoption. I see more, more use cases developing all the time. So, betting against it to me just seems crazy. And to not have some, I try to tell all my clients, you don't have to go crazy on this thing. It's got a lot of upside. You can only lose 1x what you put in it. I think you can make 10x or 100x if you wait long enough. And so you need to have some, because if you don't buy it and it goes up 100x, you're going to have regret, even if it was only, 10,000. 10,000 times 100 is a big number. So, and although Bitcoin doesn't pay a yield for older people like myself, what I can envision happening if I were to stop working at some point, and I probably will, I would just sell 1% a year and use that as my living expenses. And, I don't know, what have I got, 30 years left? And the balance that I didn't sell would go up in value. So every year I'd have to sell a smaller percent, right? Unless my living costs went up a lot. So, it provides you with a sense of comfort that you're never going to run out of money, which is a really fabulous thing, because I watched my dad, and I've watched most retired people kind of go through this, where, you can retire with a nice sum of money. It's your life's work. It's your savings.
With Operation Choke Point ending, SABB 121 repealed, and banks now able to engage with Bitcoin, institutions are gearing up for massive adoption. Nation-states like El Salvador continue accumulating Bitcoin, while discussions about a U.S. strategic Bitcoin reserve are gaining momentum. With demand surging, Bitcoin is positioned for exponential growth, leaving many wondering just how high it will go. Finally, Larry Lepard emphasizes that betting against Bitcoin is riskier than ever, as more institutions and investors recognize its long-term potential. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.